Good early morning, peoples. Bruce with Targeted Wealth Creation. I hope you guys aren't tired of hearing from me. Yep, I've been knocking out the videos. All right, so Roundhill. Let me get you Roundhill's pay. And then later, we have Yield Max, and I definitely will bring you that. I'm excited for Pulte and a few others. All right, so let's jump into Roundhill. Roundhill has really four payments on the weekly. About 5 months ago, they converted their YBTC, and I haven't always been doing it, so I made sure I updated everything in the past, and I'll discuss that because they do that weekly. All right, so let's go to XDTE, which is their weekly paying on the S&P 500. So what was the declaration? 21. Whoops, let me get I always get in OBS and you have to actually go and change what you're showing. All right, guys, don't worry about that. So what did they pay? They paid 21,589. Fancy way of paying a little more than 21 cents. What was the yield? That yield was 25.26. And that is based on the current closing price of 520, right? 43.56. Did that go up or down from the previous weekly pay date? It went down one. So you can see it went up $1.91 one week, 11 cents, $1.55. It'd been down 9.99. This was the ugly period, right? And probably going back in here in these tail end of February going into March, because we had peaked somewhere in March. So we started down, bounced a little, went down ugly here. What is that? That's 694. So just pretty darn ugly, right? And as you guys recall, I do some charting on these guys. And what the charting really indicates is what did they pay in the month? Because since they pay weekly, and if you note, the green indicates it's a 5-week pay month because you will have 3 months of the 12 where there are 5 payments. And those or 4 times, I guess you have it, because those extra payments, you know, make 52. Because if you do 12 times 4, you get 48, and there are 4 extra payments. So every third month there are 4 in total. So I make them green so that when you're comparing 5 payments versus 4 payments. So we just finished that in April. So May will not be for some of the funds, the way they distribute and pay, it does work out that May will be the 5th. But I didn't organize it that way here. All right. So moving right along, you want to get to the numbers. All right. So something to note, the reason for tracking this tells you a lot. It's in my other comparison data when I go down here in my bottom tab. I just call this the distribution data, and this is more of the analysis. But this says that you've earned, if you've been in it since the beginning, right, back in March when they first distributed, I think they launched on 3/7 or 3/9. This will tell me. And this is how much they've declined and this is how much they paid. So obviously you never want to see, and it happens sometimes in some funds, you do not want to see it go down greater than how much you've earned. That's called a losing investment. In this case, you've collected $15.44. If you bought this fund, it's dropped. It's have a NAV loss of 8.5. That's not bad in comparison. We need to see that into percentages. Um, and then I try to talk about the weekly's highs and lows. right? Because that gives you an indication when you're in a bear market, just where are you? So you can see that our weekly low was 40 and our weekly high is 53. So we're only back to 43. So continuing, you had 17 cents. Now, a lot of times what I do in addition, let me show you here, is I try and give you a yellow when we're up here, getting a higher payment. I try to say, well, have we done that before? Where are the high payments? All right. So your yield matters more than anything because that's yield on cost. That's based on what's the current price, how much did they pay, and what does that work out? If we took it times 52, remember this would be an annualized number. So you get 52 weekly payment. So at 25 yield, that's pretty low. We had a 15 down here, an 18 down here, so a 21, a 19. It does drop below those numbers. All right, continuing down. People were building up a lot of payment history here. So in this case, was 172146. That amount paid is not as relevant to you want to know what the price. The last time they paid 17.9, a little more than 17.2, 17.9 here, but the price was only 34. This time the price has stayed pretty consistent and we're dropping a little. That's why your yield is lower. Have we paid a lower yield? Absolutely. 21, right? 23. So you start to see those. All right. Continuing. Again, not bad, but if you notice on the NASDAQ 100 as opposed to the S&P 500, they're closer on their NAV erosion, right? So 1343 and you've earned 1766. So you've had this thing. If you bought it from the beginning over a year, right? I'll show you the days held over here when I go to the summary. And this is what you have to be careful of. You want to get income, but you don't want to lose principal past what you've been earning. That's called a negative investment. I know you guys will say, yeah, but Bruce, maybe it's going to go back up. Well, yeah, but it's like buying a stock at $10 because you think it's going to go to 20 and it goes to 8. Smart money management sometimes says maybe I put a stop loss in there at 8. Now, if you firmly believe it and you say the S&P over the last 80 years has averaged 12%. That is a good statistic. But there are decades where it produces 0 or 1% over a decade. There's other decades that it averages 17% a year over the entire decade. And I've been trying to tell my audience that we're moving away from the Nasdaq and the Russell and the S&P outperforming things like commodities over this next 6-7 years. And we've already had gold over the last 2 years outperforming the S&P 500. And that's so all you want to do is shift what you're investing in. Are you investing in Coinbase? Are you in crypto? Are you in commodities? Those sectors are very likely, even though they may or may not be part of the S&P 500, are going to greatly outperform the overall S&P 500 and the overall, Nasdaq. That doesn't mean you can't be in a terrific software company like Palantir and way outperform the S&P 500 or the Nasdaq for that matter. All right, guys. So continuing, whoops, here's our Russell. Not as long a history because this guy started later. The other guy started in March and it started in September. So big difference, although it's had enough payments history to be settled. Paid 24 cents, almost 25, yielding almost 38%. Changed 9 cents for the week over last week. All right, let's look at its numbers on the bottom. Do not like to see this, guys. It's actually losing more than it's making. And this was terrific early on. The first couple of 2 or 3 months, this thing was yielding way more than the other funds and was up a larger percentage. Well, that has turned about, hasn't it? All right. So actually, I'm going to go do, well, let me go do the summary, and then I need to remind myself to go and do YBTC, their crypto. All right, here is the summary of everything. So again, I know you guys didn't necessarily buy at launch, but I have to track some particular date to track performance, right? If I'm comparing something else and it has a shorter life, another company's similar fund, then I try to use apples to apples. But when I just have this full data, it's not a problem. So you can see here that actually the NASDAQ 100 from a gain or loss has the bigger drop. So you have a 16% decline over this last 14 months in just price alone, NAV, okay? But look at your returns. Here's your dividend return. So you have a 16%, almost call it 17% NAV loss. And you have a 29.5 dividend return. And then you also want to annualize these. Since this is over 1 year, this is your yearly loss. So a yearly loss says it's 14% decline in NAV, and it shrinks here, 24.42, because you've had 440 days of performance. It only uses 365 to utilize these numbers. So it's your total return, 10%. So the S&P 500 with its broad index is outperformed, right? 500 to 100, that kind of makes sense, but not by a lot. And why is even that? Look at your dividend return. Look at your dividend return annualized. The biggest performer is right here. So there must be something in that 10 that's not adding up. 34, do I have the current price correct? Let me go out and look on my other. Yeah, I think it's fine. But every once in a while, something gets askew when you're updating. But you got 10, 9, and 7. So they're much more in line now. But your highest dividend annualized number is your lowest total return. And your lowest dividend. So again, that's why I sometimes say to you guys, don't chase yield. That's not the total answer. You always want to know what total return is. I don't have a problem if you say, man, this thing's paying me 90% and it's dropping 40 and it's giving me a net 50. I got another one paying me 60 and only dropping 10. They're both net 50s. Or even if a net is just slightly lower, but you're saying, man, I'm getting a lot. That one that's paying me 90% dividend, I'm using that money. I'm not even reinvesting. I'm buying other things that are going up, right? So there's some rationale when you want to analyze stuff. I'm not saying just an absolute hard rule, but never look at something and tell me total return doesn't matter, because it does return. And then you hear a lot of terms of YouTubers and just investment people. And here's another term, and this one's important. It's called house money. Okay? House money means I invested in this thing since it started. Well, this isn't relevant, right? Because these guys aren't returning enough. You paid 52.46. It's never been 15.44. House money would mean I went in and I invested in an asset, a dividend fund. Say I bought Misty, and this clearly in house money. I bought it for $20.50, say on the opening. The close, near the close on opening day, it was in the low 20s, which all of the funds were then before they all went to 50. So Misty has paid you so many dividends. I'm guessing, I don't have the data in front. It's probably paid you $30. So if you bought it any time in the first year, or up close, because the longer you waited, the higher you paid, and then you didn't collect as long. So house money means simply, I bought this asset. It's given me all the money that I spent on it back. So if you tell me my NAV's down 30 or 40%, I'm okay because I got more than 100% of my investment back. And that's okay. But it's not okay to defend just consistent NAV loss. I mean, Misty will drop to 20, but it'll go to 45. It's done that twice, right? So if it's only 24 or 20 again, and you've been in it and you know where BTC is going and strategy or micro strategy underneath it, that's okay. That's why, if you watch my other video, people, 32% of all the money invested into Roundhill, into Yield Max is in Misty. It's amazing. And they're the 31st largest ETF firm. Okay, so let's go to YBTC. Enough, telling you data. All right, here's the actual weeklies, and they're in blue. And prior to that, they paid monthly. Now, this is pretty darn sweet if I've got my numbers together. Let me make sure. Yeah. Look at this. This is what you want. You want a lopsided. Okay, you've earned $31.13 and your NAV is down 223. Well, I got a better offering for you. But the problem is you don't earn money on it. All right. So some of you are in YBIT. Somebody was just asking me this the other day. Hey, do you think YBIT is going to stabilize based on the changes? By the way, go look at that video I did on YieldMax about what are the new changes they've applied for when they get approved. What's it potentially going to do and where are they going to apply it? Well, it has the potential to reduce the dividend yield somewhat, but it should stabilize the NAV. Not an absolute, but it should. Go watch the video. It's an in-depth of how it works. But I wanted to show you here, you've got YBTC. So you look across and you say, okay, it launched on 1/18/2024. Well, YBIT is the fund for YieldMax. Some fairness to YBIT, they were riding on top of BITO. And BITO used to pay 10 cents a month, 15 cents. And then all of a sudden it started paying $1 and all that. And I hated that about why BIT was sitting on top of BITO. And then BITO was setting atop BTC futures in the commodities market. So you look at these funds, and then they finally switched to IBIT, which is kind of the industry standard, right? I think it's Drexion who owns this. I forget for sure. But if you look at IBIT, it doesn't pay any money. Okay. But look at its performance. It's the classic. It's like doing it on MSTR and doing it on Misty and saying, hey, my total return is greater on MSTR. But guys say, but Bruce, I need income. Okay, I get it. I'm in Coney, I'm in Pulte, but I also own a lot of Palantir. So that's kind of the difference. If I know the underlying is just massively better, I'm going to own some of that. I'm occasionally going to write some covered calls and so forth. So my point is, look at YBIT. People say, is it going to recover? Well, it doesn't matter it does matter if it recovers. If you bought it on the opening day at the close, could have bought it a little cheaper, 2045, it's now 10.9. So it's down 49.7. But look at the dividends. The dividends are 52.19. Well, look at YBTC. It's had 30, now it's 3 months longer, guys, but that doesn't make a threefold here. But look at the percentage because it's such a cheap price and it's still paying. Yield Max, hence the name, maximum yield, inversed, has still outpaid yield on cost, right? On what it cost. And this guy is close. And then look over here. This is where that 10.9 on 2045 kills you. So it's actually positive now. I was doing conditional formatting, but I took it off. All right. So you tell me, would you rather own YBTC or YBIT when they're both distributing about the same amount, percentage wise of what you had to pay for it, right? But it is more money, but percentage wise, that's the argument a lot of guys give me on Ulti, and I don't always buy it. Yeah, I know it's only $6, Bruce, and yeah, it's gone from 20, but man, I'm getting 100% yield. Well, yeah, but what's the nav going to be? Have they fixed it, or will they fix it? Is it just going to go to $2 or $1? If that's the case, maybe it's not the best investment. So you always have to be aware of that stuff. All right, guys, 94.73, buy IBIT. Or if you're in YBIT, it may get better, but personally, I'd rather just come over here and buy YBTC. I'm not in it right now. I still own some BITO from 2.5 years ago. So that's kind of my Bitcoin play, if you will. I'm not even saying it's a better fund. It's really not. It's had some NAV erosion too, but I'm in the positive from how long I've owned it, what I paid for it. But YBTC is probably better at this point. All right, so here's all the weeklies, right? Here's your payment, 51.46, got a nice 57.77 yield, right? Better than it's showing up here. Um, and I also chose the weekly change, right? And all of the blue before and the white was when it was paying monthly. So a winner altogether, YBTC. And there are a few other funds. I could come in and analyze them all, guys. Let me know in comments when you want to see that, and I'll add the analysis in here and another one because there's several out there. All right, guys, that's what I've got for you. This is Roundhill weekly updates with the S&P 500, the Nasdaq 100, the Russell 2000, and YBTC. I'll be back with YieldMax later. All right, have a great day ahead. Bye for now.